right. Welcome to the TSP Weekly Podcast, where you get all the news you need to manage your TSP.
It's good to get all the news in one place because Lord knows there's a lot of news flying around these days. So to have it all in one place, all the things that really affect, the individual TSP funds is a good thing.
Yeah, and right now what's crazy is there is no news. Like, with the Gov shutdown, it's like, I think I saw where they just got the CPI out. Is that what came out today?
Yes, and that was a very big deal. We're going to talk about that a little bit. We hadn't gotten any of the really important data in the last few weeks, and the Bureau of Labor and Statistics apparently got called back to work along with some of the other agencies, but because the Fed needs that number. CPI is a critical number for whether, how the Fed makes decisions for next week's interest rate policy decision. And we'll talk about what happened, but basically the CPI came in, so inflation is CPI, came in a little bit, 0.1% less than expected. So inflation right now is 3% year over year. It's a little bit less month over month than what they expected this month. So that helps the Fed continue to cut rates. If inflation had come in higher, it would have been really hard for the Fed to continue cutting rates at the end of the month. So that's definitely the big news.
As soon as it came out, I saw articles, obviously come out as soon as they released it. And it was an example. I wish I'd kept some of them just so I could kind of share them on here. But some made a big deal about how that was going to maybe make the Fed not reduce rates, right? Because it actually is higher than it was. It was a 2.9 and now it's 3, right?
Right.
So it actually went up, but it went up less than expected. So that's a good thing.
Yes, exactly.
And so depending on how you look at that, you could read it either way, which I think is just funny because that just proves that sometimes these folks really aren't thinking or really don't know what they're talking about. They're just writing articles. And I read it and got a little confused. And then I was like, no, wait a minute. It came in less than predicted. We're okay,
Yeah, that's it. It's all relative to analyst expectations. The actual number doesn't really matter in the short term as much as what analysts expected.
All right, what you got for us this week?
All right, TSP Weekly Podcast, 26 October 2025. So we'll take a look at the weekly economic highlights. Seasonality is a big deal because we're going into the beginning of the best 6 months of the year historically for stocks. So we'll take a look at that. The Fear and Greed Index and gold kind of as a bonus chart. It's a great example of a long-term cup and handle pattern. And then the TSP fund direction. So again, most of these agencies are still on furlough. But the BLS got called in to put out that CPI report, and it was a pretty important one. So here's some of the other things that happened this week that were reported, but basically because they're not determinate based on the agencies, they just get reported. So there were bonds that were auctioned off, and as has been happening all year, the yields that the government is paying for investors to buy the bonds has been decreasing, which is a good thing. So we had a 4-week, 8-week, 3-month, and 6-month auctions. All of them sold for a lower yield than their prior auctions, which means that's less than it decreases the increase to the deficit. So the lower interest, the lower yield that the government can sell bonds at is the less that we're paying in interest and the less that's going to increase the deficit. The 20-year bond sold for 4.506 versus 4.613 in the last auction. So it's really easy to tell the shorter time frame bonds because they're much more affected by the Fed. And we know the Fed has been cutting rates. So you would expect the short-term bonds to go down as the Fed cuts rates, which has been happening. But now the long-term, right, the 20-year bonds are also coming down. And so when yield comes down, the price of the bond goes up. So that's all good. And so while it's moving in the right direction, right, 4.5 is better than 4.6. At 4.506, that is double what the government had to pay for the auction in October 2021, right? Back then it was 2.1%. So it's like refinancing your credit card at twice the rate, right? It's not good, but it could be worse, is kind of the point. Last month that you would have refinanced it at 4.6%. This month you refinanced it at 4.5%, but back in 2021, you refinanced it at 2.1%. So we're still adding huge amounts of money to the deficit. It's just everything's relative. Okay, so the big economic news for the week for sure came on Friday morning, core CPI, or core inflation rate, and the CPI. So the BLS was directed to issue the numbers because they're really, really important to what the Fed's going to do next week. We had core inflation, which excludes food and energy, was up 3%, 3.0% year over year. And that was 3.1% last month. So it was down a little bit, which is good, right? It was 0.2% month over month versus 0.3% month over month last month. So inflation is basically staying flat, coming down, right, 0.1%. It's still at 3%, which is, significantly on a percentage basis, significantly above the 2% goal that the Fed has had for a long time. And, just so we all remember, 2% inflation year over year means that the purchasing power of your dollar goes down by 20% over 10 years. So 2% may be a target, but it's not good, right? It's whatever that rate is the amount over time that you are losing spending ability. So, but in the short term, they both came in lower than expected, which was great. Makes it easier for the Fed to cut rates. Next Wednesday is going to be the day they come out with that policy announcement. The vast expectation is that they'll continue to cut by another 0.25%. Again, the cuts due to continued concerns of weakness in the labor market. And the idea of cutting rates is to lower borrowing costs and encourage hiring. Lots of layoffs announced. Meta announced a bunch of layoffs, I think 600 over the last couple of days, and they're all in their AI section, which I thought was pretty fascinating. It's going to be, everybody talks about AI, and it is the future. There's no doubt about that. But in the short term, so much spending has gone into AI, and from what I can gather, they haven't really figured out a way to monetize it. And so while it's just like the internet, in 2000, when tech collapsed 78%, the NASDAQ was down 78%, it was the beginnings of the internet. And obviously that changed the world, but it doesn't mean that in the short run, those companies can't completely collapse.
Yeah, I was in the middle of all that back in the 90s. I was, part owner in an internet service provider and ran kind of like the operations, right? And it was company after company after company that was being created. And then none of those exist now or got bought, kind of bought out and just kind of, merged with other companies. And that's kind of what happened to the one that I was in. But anyway, yeah, that's what's going to happen with AI. It's what's going to happen with blockchain, right? Same kind of stuff has to happen. All of this stuff is revolutionary, but in the short term, it's not making a lot of money. It's costing a boatload of money. But back to Meta, what I thought was interesting is because, I hadn't seen where they had a bunch of layoffs, but what I did have somebody reach out to me yesterday and pointed me to an article where they're having a huge hiring spree, right? But for low-level programmers, basically people who barely know how to program, which I thought was odd. So you don't have to have a computer science background. You don't have to have like 5 years of experience in coding. They want you to know just the basics of something like Python or, whatever, JavaScript, which was very interesting. And these are, $150,000 a year jobs. That's not a lot of money out in San Francisco, right? And most of these were remote, but you could make $100,000 $150,000 and live in Mississippi, right? And barely know anything about coding. I thought that was extremely odd. Still going to look to it a little bit more, but again, it goes kind of shows to like how you kind of flip the story, which way, right? So, bunch of layoffs in AI. I think that tells a lot. I think you're spot on. Like there's, they're not getting enough revenue to support all this, plus, you got to fire a few people to hire that one person you did for $2 million or whatever. Some of the people they've been recruiting has been ridiculous, but yeah, this is, the only thing I really, hope, and hope is not a plan, is that this isn't a bubble, right? That we've learned our lesson, that we don't let this thing just grow so big that it has to explode to really work, right? So we'll see.
Yes, we will definitely see. Yep. Okay. Seasonality. So this is a chart from Stock Traders Almanac. Jeff Hirsch down there, that's his Tumblr. You can get it at stocktradersalmanac.com. So this is a chart of the black line is all post-election years. Average, this is the average going back from 1949 to 2024. And then the red line is what's actually happening in 2025. So the average of all post-election years, which is the year we're in right now, is this black line right here. Okay, and this is the percent change. So where the average is, like this is a little bit behind. So we're in, October, we're like right here. So the point of it is the same though. He's looking for a monster Q4 rally. Okay, because the average going all the way back to 1949 is a huge move up. Right, whether you're looking at all post-election years or the Stock Traders Almanac aggregate cycle, or post-election years since 1985, they all go up in the fourth quarter, and this is where we are basically right now. So the expectation is, from a historical seasonal perspective, we should expect the market to go up in the last 3 months of the year. So why is that? Like, how do you get there? People talk about money flow, liquidity. It's basically more money getting put into the system, and it comes from all kinds of different directions. But this is the composite, right? The composite of fund flows into the S&P 500 from July 1st through December 31st, going all the way back to 1928. Okay, so it's a long-term look at the average. And what happens is there's money flow into the S&P 500 from July into the end of August. It tapers off into the middle of October, and then it comes ripping back into the market for all kinds of different reasons in the last quarter of the year. So the more funds you have flowing in, we've talked about before the passive bid. When money is going in, the algorithm just buys. So every time you contribute to your TSP every payday, whatever the price is, the algorithm buys at that price, and that pushes price higher. And so the constant inflow is what makes, on average, prices go up. And specifically the Mag 7 and Broadcom and a couple of the other companies that are really driving the whole thing. So this is all good news, right? Towards the end of the year. That's why we tend to see rallies going into the end of the year. All right, so that's how we would get there. From kind of a sentiment perspective, fear and greed index right now is pretty interesting. The best way to look at the fear and greed index really is the extremes. So when you're above 75, right? When the number is above 75, it's basically FOMO. It's an extreme level of greed, and that tends to correspond to market tops, but not always. And the opposite is also true, right? When you're down here at extreme fear, this was the bottom in April. The extreme fear level was 4. I think it's the lowest number it's ever been. So it was the most extreme fear I'm pretty sure in the history of the S&P 500 or the history of the index, the Fear and Greed Index. And so we get to it oscillates, right? We get up to a peak. We had a peak in July in FOMO basically, and then people started getting more fearful. And this was the most recent low. That was last Friday's 2.71% decline in the S&P 500, got us back down to 23 on that day. It was extreme fear. And we haven't recovered too much from that, which is actually a good thing because we're down here at a pretty high level of fear. And if we look at that on a daily chart, right, this was the low in April where we had some of the most extreme fear ever. And that was the bottom. And the market has gone up a lot, right? But we just had this, it wasn't a correction. Technically, a correction is a 10% decline in the market. But we had this big move down, churning, for a week or two. And as of today, actually, we're above that level. So if price closes on Friday above this prior high right here, then all this becomes support, right? At a time when the Fear and Greed Index shows a lot of fear. And they say price climbs a wall of worry. So when you have high fear and a breakout, it's a great setup for prices to continue higher. And you have the seasonality tailwind of inflows into the S&P 500 in the fourth quarter. So it doesn't mean that you never know what's going to happen, but the setup is there for a big rally into the end of the year. Okay, this is gold. Gold. If you've been watching at all, unfortunately, gold is outside of TSP. You can do it in the mutual fund window, but I'm just using it as a great example of a long-term cup and handle. So this is a chart of GLD. Okay, so it's not the spot gold price, it's GLD, which is an ETF of gold. But what happens is, and this is the value of looking at long-term charts. So this is a weekly chart. You could look at it on a monthly basis because we're going all the way back to 2005. But if you can keep, in your notes somewhere, we get sucked into the day-to-day price movement. But the big moves really happen from big bases. And the saying is the bigger the base, the higher the space, right? The space above when it finally breaks out. So we had a big run up in gold from 2005 to the middle of 2011, put in a peak right here. And then we had a 13-year cup and handle consolidation, right? If you were watching this day to day or week to week, you don't see it, right? Until you start seeing resistance at the prior highs. And then you look at it and you're like, okay, I have a really good cup and handle. As soon as that breakout gets above that top, it's a confirmed breakout of a long-term cup and handle pattern. And that happened when we got above $200 right here in March of 24, and price has doubled since then. So keeping an eye on the long-term patterns can be a game changer. It's just sometimes it's really hard to kind of broaden the perspective and get out of just looking at it on a day-to-day or even a week-to-week basis. That's why we do the monthly charts every month, because the patterns take a long time to play out, but they're constantly being formed, whether it's a topping pattern or a bottoming pattern like this was. So long-term charts are critically important to keep an eye on. Okay, TSP fund direction. So there's been a lot going on, but the channel on a weekly basis, it hasn't come close to being violated. This is, each one of these ticks is 1 week of price movement. This is the 20-week moving average line in blue. You get the relative strength indicator and the MACD indicators down here. Once we got above that 20-week moving average, after the April bottom, we've been in this channel. And, this one red candle week, that actually all happened last Friday, 2 Fridays ago, when the market was down almost 3%. But it was kind of, it was a flash in the pan. right? Whether or not in hindsight it gets looked at as just a news event, because that's when the president was going to put 100% tariffs on an additional 100% tariffs on China. That's supposed to start November 1st. So whether or not that happens, we'll see. We didn't get any kind of response today. I don't think from something about Canada. We're going back to the drawing board apparently with Canada. But at any rate, until this channel gets violated, the trend is up. MACD is weakening, which is fine. You can see MACD weakening, here and then turning back up. So really it's all about price. Until price gets down here below that channel line, the trend is your friend and it is still going up. If you are happening to be looking at this on a daily basis, I just wanted to point out kind of one thing. So this is a daily chart now. Right? Each one of these is 1 day of price movement. This is the 20-day moving average line in blue. So back in December 2024, we got this big red down candle. And we had been in a really solid uptrend in 2024, and we got a big red down candle. And we had, a few weeks of mild correction, and then a rally to new highs. And then some more consolidation, but eventually it rolled over, right? This candle was a problem. It just took some time for it to play out. This is the biggest break to the downside that we had for a long time back there in 2024. So it remains to be seen whether or not that big candle is gonna result in something kind of similar. So what we did not have happen in this case, or in this case, was an immediate V bottom. In all these other cases, whenever you see the market, like this was a big gap down here, and then it immediately turned back up, right? We had a few days down here, and immediately turns back up. We got a bunch of churn right here. So it's indecision in the market. Today is a big day. So this is as of Thursday's closing price. So if we close up here, right, that's different. It's full speed ahead. It just continues on. So we'll see what happens by the end of the day. All right. That is all I got. If you guys like that kind of analysis, we're going to do, we do a whole lot more of it for our subscribers. There's going to be a lot of info coming out this weekend, especially if the market closes where, if the gap up holds. We had a gap up today. If that gap holds and we close above the prior high, there's going to be a lot of talk about that this weekend.
Questions. All right, guys, if you have any questions, just put them in the comment section wherever you find the video. If there's no comment section, you can always email us, support@growmytsp.com. Support team will get over to us. Hope you guys are hanging in there. If you are one of the many folks that are sitting on the sidelines waiting to go back to work, hopefully get this thing figured out soon. And hang in there. You guys have a good week as best you can, and we will see you next week.